Good evening, my name is Sam Leonard, and today I'm giving a brief presentation about a company called Nabors Industries, and kind of trying to make the argument that you should take a long position in their stock, which is buy right now, because the stock is going to appreciate in value and you stand to make a lot of money with a very simple decision. So next slide, please. So a brief overview of what the presentation is going to entail today. Investment thesis, full with different investment merits, company overview, an in-depth look at each investment merit. It's a three-pronged approach. And then a conclusion, summing everything up, and then a brief section for questions. Next slide, please. So the investment thesis. I currently value Nabors Industries at about $31.77 a share. They're currently trading at $28 a share, which means in the near future, about a quarter or two, I see this appreciation in stock value. So if you were to buy today or in the near future, you could realize these capital gains on this stock. This perspective, this outlook is based on a three-pronged approach, that being the first being a very positive industry, positive industry outlook for the industry that Nabors practices in. Two, very strong ties internationally compared to its competitors. And three, the high level of capital expenditures they've been spending since 2008 to upgrade their fleet. Next slide, please. So a little bit about the company. Next slide. The company was founded in 1968. In 2001, it became a Bermuda-exempt company, which basically deals with taxes. Their tax exempt, which stands they can earn more revenue because they're so big internationally as well as domestically. The firm is a little different than what you'd expect. It's not like a Schlumberger or an Exxon or a BP. They're actually a drilling contractor. So basically what they do is they rent rigs. Imagine renting a crane to build a house. They don't find the oil, they just supply the rig, and they charge a daily rate to use that rig. And they have operations of both natural gas and oil. Actually right here is a little vial of sweet Texas crude oil that's unrefined straight out of the ground, just so you have an idea of kind of what it looks like. Most of their operations are in natural gas, but they also have big operations in oil. Next slide. They're actually the world's largest land drilling contractor. Again, what that means is they're the world's largest rig renter. It's a pretty big deal. Next slide. So a little bit about the investment merits. Next slide. Again, the three merits are industry trends, strong international relationships, and large capital investments. Next slide. So industry trends. Both these slides are pulled from the U.S. Department of Energy. There was actually 23% growth in oil and natural gas drilling in 2013. The U.S. Department of Energy expects 12% CAGR, or a compounded annual growth rate, which is a very high number for 2017. If you see here a very big number in tight oil going up from 2011, and even more important, a huge projection out to 2040 for shale gas. Nabors Industries stands to profit big time off these shale gas plays because the capital expenditures I'll get into a little bit later, but they're very uniquely positioned and they really diversified themselves from the competition. Next slide. So the strong international relationships. To drill internationally, you have to have a contract. They have the most contracts of any land and sea drilling contractor or company. What this means is they can take advantage of different prices internationally. For instance, natural gas in the United States is 2 BTUs, or British thermal units. In China, it's about 13 or 14. So if you can produce natural gas in China, you have a much bigger margin, aka a much bigger profit, which will translate to a higher share price, which translates to more money to y'all. The company's also been investing big time in liquefied natural gas, which is a process which you can take U.S. natural gas, liquefy it, and send it over to China, the Middle East, where these margins are higher, and sell it there. Again, another source of revenue. Next slide. And last but not least are the large capital investments I was mentioning. So since 2008, Nabors Industries has invested a significant amount of money in upgrading their rig fleets or the rigs they rent out. What this means is these rigs are more efficient in terms of they get more oil out of the ground than the other rigs and natural gas, and they use less byproducts. So they use less different chemicals, salt water, hydrogen fluoride, that are costly to dispose of. So what this means is they're the best rigs, that the companies like Schlumberger, Exxon, and BP want to use their rigs. And you can charge higher rates, again, more money. Another big point to mention is the EPA continues to release information about the hazards of coal and oil mining, which is leading to an increase in natural gas mining, and like I previously mentioned, Nabors Industries is very well suited to take advantage of their natural gas plays. Next slide. So this is just a brief graph. This orange line right here is the capital expenditures. The red is their revenue. Just so you can have graphic representation of what I've been saying. Next slide. Conclusion. Again, just to reemphasize, positive industry trends, strong international presence, and a high return on capital investments will prove to be to make Nabors a really good company to invest in. And that concludes my presentation. Next slide. Are there any questions?